Century Pacific faces a critical moment as U.S. tariff decisions could make or break their 14 billion peso Vita Coco partnership. Century Pacific Food, ticker CNPF, is the Philippines' largest canned food company with 80% market share in tuna and the exclusive supplier for Vita Coco's coconut water through 2031. But here's what could cost you big time. The 17% reciprocal tariffs directly target CNPF's coconut water exports to Vita Coco, potentially crushing margins on this high-value partnership. The stock already dropped 4.3% immediately after tariff announcements, and while management downplays their 5% U.S. exposure, the impact on their premium coconut products could be disproportionate. This threatens the entire growth narrative built around their Vita Coco contract. However, while everyone panics about tariffs, there's a reason smart money sees this as a buying opportunity. The 14 billion Vita Coco contract runs through 2031. That's 7 years of revenue locked in, regardless of short-term tariff fluctuations. Vita Coco needs CNPF's production capacity and isn't walking away from a deal that supports 4,500 jobs. Plus, CNPF dominates 87% of Philippine tuna and 47% of corned beef markets, meaning tariffs only affect a small portion of their diversified revenue streams. Their pristine balance sheet with just 10% debt gives them flexibility to weather any temporary margin pressure. And here's what most analysts are missing completely. Century Pacific isn't just a coconut supplier. They're building a vertically integrated food empire. Their 3 to 5 billion peso capital expenditure plan for 2025 focuses on expanding tuna processing and pet food segments that have zero tariff exposure, with 18.2% return on equity versus 15% industry average and inventory turnover improving from operational investments. They're positioning for market share gains while competitors worry about trade wars. The key moment to watch comes with any U.S. trade policy announcements or Vita Coco guidance updates on their partnership structure. This will determine whether the market overreacted to tariff fears or if there's real fundamental damage to the growth story. What do you think? Are tariffs crushing this deal or creating a buying opportunity? Drop a comment below.